Okay, I think it's time to start. Welcome everybody to the FinTech Society intro event, People Make FinTech. I'd like to thank you that you took your time out of your schedule to attend this event. The goal of this event is to introduce the FinTech Society to you, to talk a little bit about our history, what we have planned for the future. I also want to demystify the term FinTech. FinTech can be a daunting term, but it really isn't once you understand what's behind it. FinTech stands for financial technology, which is used to describe new tech that seeks to improve and automate and deliver the use of financial services. In most cases, it refers to the industry and the companies that deliver these solutions. Such companies that you might have heard of are Airbnb, Uber, Lemonade, but there are many more in the industry. Those of you who feel FinTech might be challenging with our society, you will experience that whatever background you came from, you have something to contribute to the field of FinTech. Everybody is able to contribute, and this is a big goal of ours to prove this to you. And so I encourage everyone to join the FinTech Society. Before I continue to talk about the society, I'd like to outline the agenda for today. After my introduction, Stephen, the head of FinTech Scotland, will talk about current developments in the industry. After that, Jan, the founder of the FinTech Society, will talk about why he started the society, what he learned from it, and how he benefited through his academic and academic journey and his career. Finally, Hans will finish the presentations with an introduction to blockchain and decentralized finance. At the end of the webinar, you will have a chance to ask questions. But if you have any pressing questions, just write them in the comment section and we will take some time to answer them after each presentation. Now, to continue my introduction, I'd like to present the new look of the society, a fresh minimalistic look. We decided to redesign the society with the university logo and our traditional look. I'd like to say a huge thanks to Martin for designing these graphics. Now on to what to expect from us this upcoming year. As you all know, due to the ongoing pandemic, our events will be a lot different from previous years. This semester, we will most likely not have a chance to host face-to-face events. However, we will strengthen our online presence and accommodate all our members' needs and expectations accordingly. We will run workshops, participate in host lectures, organize case competitions, such as the Applied FinTech Project, or AFTP, our main event of the year. This year, the AFTP will be hosted in the second semester in hopes of being able to host it face-to-face in a traditional manner. This semester, our networking events and socials will be a bit less focused on, but we will do our best to substitute it in an online manner. Finally, this year, we will also focus a lot more on collaborations with ACES, Enactus, and the Startup Society, or GUS. The best way to stay tuned for these events is through our Facebook page. We also decided to have an overarching topic for this semester, financial education and inclusion, both of which we had events around last year, which had great receptions. Finally, I'd like to invite you all to join the society. We have created a tiny URL link to join until our website is fully developed, and also follow us on our social media, Facebook and Instagram. If you have any questions that you would like to post to us directly, you can also contact us at uogfintech@gmail.com. I'd like to hand it over to Stephen now, who will talk about developments in FinTech.
Thank you, Shayham, and delighted to be with you. I'll just try and, if I can, share my screen. There we go. Hopefully you can see that. Let me just put that on slideshow so it just, if from the very sort of start. Hopefully that works okay. There we go. Anyway, delighted to be, thank you, Sharon, for that introduction. Delighted to be back again. And especially here with Jan, who you're here from the moment, one of the founders of the society itself. I'm the Chief Executive of FinTech Scotland. We're about 2.5 years old, similar to the society actually. We were both born at the same time. And as you can see there, our mission is about making a better world for everybody, doing that through financial innovation, collaboration, and inclusion. So very much aligned to what Shayhan sort of said in terms of the purpose of the society. And hence we work very closely with you and very much give you the opportunity to see the opportunities of what's happening in Scotland and how we connect with the world as well, because that will present you as a society, but also as individuals, opportunities going forward. So I'm just going to take 10 minutes or so just to give you a very quick run through. These slides are available for you, and Sharon and the team can sort of share them if you're interested in just referring back to them. But the first thing, as Sharon said, that to think of FinTech not as something in a box or something that's an industry or sector, but as part of this bigger revolution that's happening, the way that society and the economy is changing, a much more digitized way in which we live, and therefore it interrelates to these other areas of innovation and aspects that are changing our lives as people, as communities, and in business and work as well. So think of this as something much bigger than just an area where you would go to work. It's part of a bigger movement of change. And therefore, FinTech isn't really a sector or an industry. It's actually a movement that's global. FinTech Scotland was born because of that. Some of the large enterprises, universities and government for actually, this is important, let's create a leadership body to say, this is important, let's bring together all the players so we can build off the heritage of what Scotland has done around financial innovation with technology, and then project it into the future so we can play a part not just in Scotland and the UK, but globally on the whole FinTech stage. So there's 3 things I'm just going to share with you, just very briefly, around the opportunity, how people participate, and then some examples, and Sharon sort of touched on one of those around financial inclusion. So first of all, this opportunity, it's important not to see FinTech as just about the tech or even just about the fin, but it's taken some of those advances around technology and in the way that other disciplines are advancing to drive new innovations in the way that people manage their money, the way they save, the way they give, the way they borrow, the way they look to buy a house, how they pay, how the markets are regulated, how customers engage with money, how the capital markets change, how it impacts climate, and the whole area of financial crime as well. So this is addressing problems, friction, and areas where the financial world could do much better for people, communities, and business. And that's the opportunity, and that's what makes it so exciting from my point of view. The importance about that opportunity, though, it only comes alive through people. And people make FinTech because it's all about skills, your skills that you'll develop and you have today, experimenting and innovating, and then taking the ideas that you'll have of new ways in which the financial world can operate to accelerate those into new products and services that big companies offer, but also some people have actually gone on to create their own new businesses out of this, often referred to as FinTechs. The important thing about this opportunity is, again, to emphasize not to see it as something in a box. This is part of a bigger change in the way we see changes around health tech, very apparent at the moment, of course, in this last 6 months because of the pandemic, space tech, 5G and comms. All these areas are changing the way that we lead our lives and the way that we will work in the future. FinTech's part of that. And therefore, to see it as something part of a bigger change and the opportunities that you can play in that. So that's a really quick overview about the opportunity at a very high level strategic point of view. But then, so if you're interested, what about the participation? Well, what's exciting about Scotland is we have a cluster of encouraging that participation, whoever you are, whatever your skills, whatever your experience. And that's fueled on the left-hand side here by a community of small, medium enterprises, and some of which, if you get involved with the society, you'll have a chance to meet. These are small businesses driving change, changing the financial world for the future from here in Scotland. Really exciting. Some of those businesses were started here. Some of them were actually started elsewhere in the world, USA, China, Hong Kong, Australia, Europe, and now are also in Scotland. Alongside that, on the right-hand side, you've got all the big financial institutions. All of these are based with big head offices and operations in Scotland, Glasgow, Edinburgh, and elsewhere. Now, what's important is they are participating because those organisations need to change. They need to evolve. They need to innovate to be part of that. So they want to be part of the cluster. So the opportunity is bringing together and alongside your role as a society, really to be involved as part of this cluster of innovation. Now, that only really happens if you get people. And the people aspect plays a key role because of the skills. And Glasgow has a terrific qualification around FinTech itself, run by the Adam Smith Business School. But it's not just about FinTech skills. It's skills in obviously technological areas, economics, finance, design, philosophy, psychology, geography, all social sciences, all play a role in the role of FinTech. And so does skills, and so does the importance of diversity. They have put down there the student society, but it's encouraging more people to engage in this whole area of innovation. And then that helps to fuel the investor side and the development of what we call innovation hubs that create the laboratories that drive the new enterprises that are created. So that's the way that participation happens. Let me just take a few minutes then to give some examples. So one point, these are some of the FinTechs in Scotland and how they are changing parts of the financial world, not just here in Scotland, not just in the UK, but globally around, it's the way that people are identified, who they are, how people access their money. Take Amicus as an example, how people engage with their data money through Money Dashboard, how people actually give sustainably who have been involved with the society over a couple of years, and how people then look at their retirement monies, as in the case of Origo. At the end of the day, each of these businesses are dealing with a problem in the way that the financial world operates, and they're solving that with technology, but also with a different mindset, a different thinking, starting with a different design around it. And that's what makes this exciting. But also part of that actually is the opportunity with the regulator. And the regulator is part of our cluster in driving change in the financial world to support that move to a green economy, to address the issues around vulnerable customers, again, very appropriate at the moment in the pandemic environment, tackling financial crime and helping people who need advice. So the regulator is part of the cluster of innovation, and that makes it very exciting because they provide the highway code, and that highway code will change over time to make sure we're addressing the real issues of people. FinTech Scotland has Europe's only and the UK's only consumer panel, which involves those organisations that represent the voices of people, whether Age Scotland, Money Advice Scotland, Citizen Advice, to make sure the problems are understood, and then thinking about how new ways of thinking, new ways of designing services and products, new ways of using technology can address those going forward. And this plays an important part in that innovation in Scotland. And what's really important at the moment, again, is one of those key areas of focusing on helping people's wellness, well-being, particularly from a mental health point of view. That's a real challenge on financial matters generally, let alone in this current COVID-19 situation we have. FinTechs are really active in this space in Scotland. And therefore, there's a real social purpose behind what we're doing, a real human element behind the aspects. So the words FinTech don't really bring that alive, but the human element is very, very strong here in Scotland. And that's been particularly the case in addressing some of the COVID challenges. So the FinTech community, those firms you see there on the left-hand side in that circle, has grown from 130 firms to 150 firms in Scotland now. And we've got more firms coming into Scotland because they want to be part of this driving the new innovations through digital technologies and data going forward. And here's some examples some of those firms doing, whether it's helping people around how they claim the right social benefits, helping small businesses address the issue of cash flow, or helping people manage their day-to-day financing as their employment patterns sort of change and their ability to work and they lose their job and find new jobs. All these businesses, again, are helping people with money, using new technology, but also a new way of thinking. What's important to know, this is just in Scotland, and Scotland, FinTech Scotland is part of a global movement, very much in Europe, and we're part of a 16-hub collaboration, and that article there, headline on the right-hand side, is very much about our collaboration across Europe with those FinTech centres who also do have the same ethos of driving change to help people's financial issues. So think of this as not just a small localized Scotland or UK. Think of it as a global phenomenon that's happening around the world. And again, that makes it hugely exciting. My final point is just to say what we're in the middle of at the moment is actually one of Scotland's few festivals that are happening this year, the FinTech Festival. Over 4 weeks, we're in week 3 at the moment, and there's 85 events that have taken place or are about to take place the rest of this week and into next week. Next week is a huge week, actually, and you can just go online to FinTech Scotland, see those events that cover all range of things, everything you could think of about changing the world of money and finance and how people are doing that, and just join in. Just attend, just to join these events are very kind. So just go onto the website and you can see all the details of all those different types of events. And of course, your event today is very much a part of that. So that's the backdrop really about the context I wanted to paint. As I said, these slides are available. And I always like to finish off with a real hero, one of my heroes. I'm very old. I'm really old. So one of my heroes from over 40 years ago was this man here, Joe Strummer. He was the lead singer of The Clash. And he said, the future is unwritten. Basically sort of saying, we can write the future. It's not predetermined. FinTech is one of those tools for doing that. Thank you, Shehan.
Thank you, Stephen. That was a great introduction and summary of the FinTech industry. We're really lucky to have you here today. I'd like to hand it on to Jan now, who founded our society. He will talk about his experience and what he learned from the whole endeavor.
Okay, so hello everyone. As Shyam said, I'm Jan. I started a society 3 years ago when I was doing my master's degree in quantitative finance at University of Glasgow. So my views are more from the business school student perspective, just to say upfront. And I was asked to talk briefly about why the society was set up and how it benefited me in my journey after graduation, in my career, and how it could benefit also your careers as well. So the decision to start a student society, which would focus on all the different topics that Stephen mentioned that are under this huge umbrella of FinTech, it came about quite easily, actually. There was a summer before I started my master's degree at Glasgow University, when I was reading a lot about blockchain and cryptocurrencies, which Hans is gonna be talking about shortly. And those ideas and concepts, they seemed really interesting to me. I was studying economics and finance before I came to Glasgow University, and I knew how the financial markets and the economy work. So financial technology topics were very fascinating to me, especially due to the innovative nature and how they could change the way how things have been done for decades. So I was looking for opportunities to learn more about these topics, and there was nothing much available back then at the business school. And so the student societies are, for obvious reasons, more flexible in terms of responding to the trends in the industry than universities. So setting up a student society was just a logical next step for me. I was also realizing how significant impact technology has on finance, and the fact that it is the entire movement, not just a bubble that comes and goes. And I felt like that's something that all the business students could benefit from. All the students of any degree basically could benefit from and should know about, so that they can take the actions and make themselves ready for the future, having this awareness of FinTech. So from the beginning, the society was designed to be a complement to the student studies, and it was meant to offer them something that university did not offer, but to offer them something that is actually very sought after by employers, especially in the financial services industry. I know that Shyam and the rest of the board share this vision too, so I'm sure they are going to be following on this vision this academic year for the members of the society as well. Since my graduation, I've been working at JP Morgan in Glasgow. I joined the technology team initially as a technical business analyst. Then I've done external software development training, and I recently moved into a software engineering role. From this experience, I think the main takeaway for you would be that if you want to work in technology as a business student, it's not as much about having the right skills right away, but it is a lot more about demonstrating your proactivity to learn, your enthusiasm, genuine interest in technology, and Above all, employers like to employ students who understand trends in the industry and who know what is happening in the real world, not just what you learned theoretically at lectures. So joining the FinTech Society can really help you demonstrate this when you are applying for graduate jobs later on, obviously. In my experience and from what I've learned from other people who were involved in the society previous years, whenever they mentioned FinTech Society on their CV, it became a very favorite discussion topic for lots of employers at interviews, even for non-technology roles, exactly for the reasons that I've mentioned and Stephen talked about as well. So I would just encourage everyone to get involved, have fun, and if you have any questions on anything I've said, feel free to reach out to me, and I'll be happy to answer. Okay, I'm now gonna hand over to Hans.
Thank you, Jan. Yes, we absolutely share the vision that you set up and kind of laid out for us. We absolutely believe that this society, being engaged with the society, will increase your employability, but it will also teach you to be open to opportunities within this industry. Whatever your background is, there is a place for you. But now I'd like to hand it over to Hans, who's going to introduce his topic, which is blockchain and decentralized finance, briefly.
So is everyone able to see the screen? Hello?
I believe so, yes.
Okay, thank you. Hi guys. I'll be here today to present more about the fascinating emerging technology of blockchain. Yeah, firstly, I'll give a brief introduction about my background, so how I actually got immersed in this field. And also, I was one of the new FinTech students at the University of Glasgow. So I came from a financial background, studied finance control back then at the Hague University of Applied Sciences in the Netherlands. Then came across this technology in mid 2017, and reading more about the technology back then, it sounded very interesting, especially assessing from a financial point of view. And yeah, I wanted to learn more about technology on its own, so how it could actually be integrated with finance. So that was my key underlying motivation to choose the FinTech MSc. So recently I've graduated and I'm now working in the blockchain industry. So hopefully I can give you guys some insights about this industry, this technology, I mean. Okay, so first of all, I'll give you guys a brief introduction. So actually more of the roadmap. So what Steven and Jan already said, like about FinTech, it's a very interesting, innovative industry with lots of opportunities, especially if we compare them with the traditional banking industry. So there are definitely a lot of aspects we could like revamp, and looking at all the new startup, the new entrants that try to create more effective and accessible solutions to the unbanked people. So there are a lot of people, even like in the UK, I believe there are like 1.5 million people that don't have banking facilities. And now with new possibilities, alternatives, hopefully we can help those people to get access to those financial services and products. So there's actually quite an interesting evolution going on. So FinTech started quite early on. Then we also had like the Chinese version. So they call themselves like the TechFin. So those big tech behemoths. Then open banking is now also very hot in the UK. So creating like ecosystem where like both conventional institutions and new entrants can collaborate to create like more innovative and more user-friendly solutions. And then I'll be looking more into the new emerging technology of blockchain. So how it kind of started is back in 2008, there was a pseudonymous person named Satoshi Nakamoto, and he published a very interesting paper introducing Bitcoin. So it's essentially a peer-to-peer electronic cash system, which means that this network is not controlled or monitored by one single entity. It's essentially a diverse, spread system network around the globe where everyone can participate. So essentially an open ledger with all like ingoing, outgoing transactions in a chronological order. So there's actually a timestamp and which records all the transactions. So it's actually peer-to-peer, meaning that we don't need an intermediary. So it's a trustless system. And within the network, we have so-called interconnected nodes, which are computers or users that collaboratively verify each transaction and validate them. So that's just in a nutshell. And there are a few interesting components of public blockchains. First of all, it's a ledger, so it's a shared ledger globally and peer-to-peer network, and it's encrypted through with cryptography. So meaning that similar with WhatsApp, we have encryption, so it's very hard to crack. So it's pretty safe. Also within the network, they use a consensus algorithm called proof of work. So it's actually there's a lot of computational power involved, which also stimulates the participating nodes while maintaining the security of the network. And an interesting thing I would like to show you guys is the distribution, so the structure. So with regular traditional systems, those are predominantly centralized, meaning that there's a single point of failure, which translates that if something happens within a firm or a network or database, the whole system collapses. And with decentralized and distributed versions, what you can see from those dots is that if one point gets attacked, the system can still operate in a way that the whole system won't collapse immediately. So there won't be like a systemic failure. And that's how actually, in a nutshell, the structure of public blockchains are realized. So these are very key important components within open source blockchain. So why open source blockchains? Because like in a later stage, I will also cover the private ones briefly. But essentially, the characteristics, the components of open source blockchains, which people have named them the 5 pillars of open blockchains, are borderless, open, borderless, public, neutral, censorship resistant, and there's potentially another one you can add. So the 6th one, which is immutability. So first one, the openness, it means essentially that everyone can participate in a network. So it's really like open. So there are no thresholds or boundaries. And even like software, so the nodes, the computers can participate in a network. So there are hardly any restrictions. So borderless, meaning that like the internet, it's not in a physical area. So essentially, if you have the internet, you can verify, you can be a participant of the blockchain network. So it doesn't matter where you are. So if you have internet access, and you can become a participant in the network. It's public in the sense that everyone a participant can verify the transactions on a blockchain. So if you use the ledger and you want to produce a transaction, everyone on the network can see the transaction and can follow it, and the participants can verify whether the transaction is legitimate or not. It's neutral in the sense that unlike traditional financial institutions such as banks, we actually own the assets. So in this case, for example, we had Bitcoin, so you actually own the asset. So that's a key component with like conventional, traditional systems. Censorship resistant, meaning that it can't stop you from sending money. So for instance, with traditional banks, if you want to send a large amount of money, for instance, from UK to Philippines, a bank can freeze your money and can basically prohibit you from sending money within like open source blockchain. So if you want to send a fraction of Bitcoin or 1 Bitcoin, there's no one that can stop you from sending the money. And also immutability, so it's immutable, meaning that the network, once transactions have been confirmed on the block, so on the blockchain, you can't reverse it. So it's a very robust and reliable system with a lot of like transparent and open source components, so everyone can essentially see that all the transactions are legit, not like no malicious people can hack the network. So now I would like to briefly compare like public with private ones. So I won't go into too much details because it can get quite complicated, but essentially like with public, what I mentioned, the 5 pillars, if we compare those with private blockchains, for instance, like what IBM has, so they have their own private solution, enterprise blockchains called Hyperledger. And how those actually differ is that with public, it's all transparent. So, and also in terms of scalability, the network can be quite congested, meaning that you won't have a very scalable system. So it might take some time to produce the transaction. While with private blockchains, those tend to be more scalable. And also another element I covered is the immutability. So with public blockchains, it's immutable, meaning that once a transaction has been recorded on the blockchain, you can't reverse it anymore. And with private blockchains, that's usually the case. So like regular enterprises or governments, they would prefer to use private blockchains because you can scale and it's immutable. And finally, talking about the transparency. So with public blockchains, it's usually transparent. And while with private blockchains, traditional firms are in general more skeptical. So they don't want to reveal all the important information. So when enterprises use blockchain, they prefer more solution that's less transparent. So you won't reveal all the key information with your competitors. And also another aspect which we have to consider is the GDPR component. So with GDPR, it's essentially very tricky to release public personal data information because it's very sensitive. So in that aspect, enterprise solutions, so private blockchains, can be also a more favorable alternative. Now looking at the potential blockchain, so we predominantly talked about transactions, so in a form of a peer-to-peer money system, but actually blockchain solutions can also help in different industries. So for instance, like we have logistics, supply chain, medical healthcare, gaming industry. So for instance, with an example is with open source blockchains, when we look at logistics or supply chain, you can actually verify and track all the ingredients. So for instance, with coffee beans, you can now with blockchain, you can track the coffee beans that's being, for instance, farmed by the farmers or collected by the farmers somewhere. And then all the way up to the final process, which we create, like for instance, coffee. So it's a verifiable and trackable like system. And so with medical healthcare, you can track all the information, so you know that information is verifiable and legitimate. So looking at the future of blockchain, there are a lot of opportunities, but also a lot of like issues we could face. So for instance, like the one I mentioned is regulation. So with GDPR, it can be quite sensitive because like the component, the characteristics of open source blockchain is trustless, transparent, and open sourceness. And if you store sensible data that might contradict, might be very controversial with GDPR. So regulation is a very key component which regulators and all those blockchain startups initiatives have to find a balance to solve this issue. Also, looking at the long term, we see increasingly more adoption by enterprises. So, for instance, EY has been releasing their own public semi-hybrid version of public blockchains called Nightfall. Also, IBM I discussed. I think JP Morgan has created their own JP Morgan coin, but also they created their own enterprise solution, Quorum. So there are a lot of bigger names, bigger institutions that are that have identified the opportunities of blockchains and now are starting to use the solutions to create like more beneficial solutions to the financial industry. And also we've seen like China and other nations creating their own digital currencies, so own national digital currencies that might in the future be an alternative, or they might replace their own euros or dollars for a more digital version. And also we've seen like bigger enterprises such as Facebook creating their own peer-to-peer payment solutions, with Libra being a famous example. So overall, the industry seems very thriving, and lots of opportunities can be identified. So it's a very interesting industry. But yeah, the future is still like evolving. So it's very hard to say how the future of blockchain would look like in maybe 3 to 5 years. Okay, that's it.
Thank you, Hans. That was a great summary of an otherwise very complex and technical field. We got a couple of questions, one for Jan and one for Hans. I'll start with you, Hans, okay. Since that's the more complex. It's quite a complex question.
Yeah.
I also sent it to you,
okay.
so you can read it, but I'll just read it for the audience.
Okay.
So you mentioned about the various nodes in the blockchain. Is the proof of work more successful as a method than the proof of stake? So the question continues, but if you want to answer this first.
Yeah, okay.
Go ahead.
Yeah, sure, because I think it's quite a large question. So to start, yeah, this is a very nice question, a very interesting one. But actually, like Bitcoin uses like proof of work, which uses like a lot of electricity power, so computational power, which in the participants, so the nodes, they actually calculate. They continuously calculate and they try to guess a random number, which is called a nonce. And once they manage to get the random number, the whole block gets verified and they present it to the entire network, and everyone can verify the network and see whether the whole block, the transactions are legitimate. So looking at the alternative, we have the proof of stake. So it's a more like a more friendly solution to the environment, because like with proof of work we use a lot of computation power, and with proof of stake it's actually being verified with people that actually own a piece or a share of the token. So let's say in a public alternative solution we have Ethereum, so they actually want to like transfer to the proof of stake solution. like both consensus algorithms have their own pros and cons. So it's really hard to say which one is better than the other one. So it really depends also on the purpose of the blockchain. So if you want to have like a robust, censorship resistant, immutable ledger, proof of work is, in my point of view, better. But if you want to have like a less energy consuming network, proof of stake can be a good solution. So there's no like 100% a better alternative consensus algorithm. It really depends on what you want to do with the network. I hope that kind of answers the question.
Yes, that was a good
the
summary.
First part. Yeah.
So the first part. Yes, I'll continue reading the question.
Okay.
Talking about the system hacking in the case of public blockchains, if a bad actor attacks the system with the objective of disrupting the system, can he do it even if he has no monetary benefit from the attack?
So it's quite a complicated question. So I'm not sure whether the audience will fully understand it. But so within the network, there's something called the 51% double spend attack, which means, and like I mentioned before with the proof of work, it's all about like the electricity power, so the computational power. And in theory, like if you have like a government or a malicious organization that controls more than 51% of all the computational power within a network, he or she or it can like temporarily hack the system. But then it's all about probability, right? So if you have 51%, you have like a couple percentages more probability to hack the system. But actually the network, so Bitcoin, uses a very innovative and also a very smart approach. So all so in every 2 weeks, the consensus algorithm kind of recalculates the difficulty. So if there's more computational power coming in the network, the math algorithm changes, and it becomes more challenging to find the node, so the nonce, and solve the block. So it really depends on the computational power. So let's say if you are a government or you're a malicious party and you want to attack the network of Bitcoin, and you got more than 51% attack, and let's say you find the nonce and you got the block, you can double spend. So you can, for instance, like double spend the block and get more Bitcoins than you should actually. So you can actually then attack the network, but it's temporarily. So you can't like completely shut down Bitcoin network, because it gets stronger like every 2 weeks, because it uses the mathematical formula to recalculate computational power. But it's quite complicated to like really understand if you heard like for the first time. But it's the good thing about like open source blockchains like Bitcoin or Ethereum is that it's all regulated, or it's all like the consensus being like reached by this mathematical formula. So the proof of work formula, which no single entity can manipulate or control. And so far, it's very robust. So it actually uses SHA-256. So it's a very robust cryptography, which so far, so I think the NSA also uses this cryptography, this algorithm to really secure themselves. So far it hasn't been hacked. So it's a very robust algorithm, consensus algorithm, which people can, which the network uses, and so far it hasn't been hacked.
Yeah, thank you for that. There's a third part of the question as well, which I'll read in a moment. But we will have most certainly a workshop in the future just dedicated to blockchains, which you can, which we will advertise on our website and Facebook. So please do look out for that. And for the last part of the question, blockchain has had its fair share of regulatory actions across the globe. How do you see these problems being handled in Scotland or UK landscape?
So I don't know exactly from Scotland or UK perspective. So I know the FCA works with it. I think maybe like Stephen knows more about it. But like in general, like we have GDPR. So I think it's like in the current phase, how I witness it, it's a very gray area. So there's no specific regulation with it. So it's very complicated. And also like in general, like technology evolves faster than regulation can keep up. So there's like always this kind of delay, especially like in GDPR. So it takes quite some time to come up with a new law, like with new regulation, and then it takes a lot of time to verify, to go through it, and then finally go through like all the participating parties. So it's a very complex system. So I think that on the long run, there are definitely some opportunities like with blockchain and cryptocurrencies, as we see like more enterprises like starting to adopt like those alternatives, and also like nations implementing like national currency. So on the long run, I think the elements, a few important elements within blockchain are definitely like key to the financial industry. And also over time, I think like governments will create like more fair like approach with regulations that can really find a balance with emerging technologies such as blockchain, and while like maintaining the security and safety of users, because it's a very complex and open question. So it's very hard to answer, like to exactly know how it will evolve. But I think we'll find a balance eventually, and both the technology and the regulatory aspects can find a healthy way to collaborate and create like more innovative solution which can benefit fintech and the financial industry as a whole.
Stephen, you want to add something to that?
Yeah, I'll just add really, just very briefly, 2 points really. One is I actually challenged the question, because actually the regulations not had an issue with blockchain. It's like sort of saying that with a car, that a car, the issue is with the engine, when actually the issue is with the vehicle itself and the driver and where it's going and the road that it's on, rather than actually the engine. Now, it doesn't mean the engine is perfect, but don't focus on the engine. Think about how the engine is being used on the road, how it's being driven in a car. And that's how you need to think about blockchain. So actually, it's the wrong way around the way the question. The issue is around the way that businesses are applying it and how business people are applying it to deal with certain parts of the financial markets. The second point, as Hans sort of said, that's why we work very closely with the FCA, because regulation always lags behind the market. And again, if you take the road analogy, when people started driving cars, there wasn't a highway code. But in 1930, there was a highway code. That highway code of 1930 is very different to the highway code today. So it has to change, and that's the same with regulation. But it's always a bit slow, because cars, as with financial and technology, are always ahead of the highway code. So that's why the FCA put someone, a person called Nicola, who some of you have met, inside FinTech Scotland, so they can see what's going on, so they can anticipate and plan for, as Hans sort of said, those changes, and trying to keep up to date to understand. So it's a good question, but it's the other way around it should be, would be my suggestion.
Thank you for that. I think regulation in any respect is a very interesting and complex problem, and a lot, in my opinion, a lot of times it lags behind the curve of the technological development.
Yeah, but you're right, Ishaq, but regulation shouldn't be used as an excuse. Because if you're doing the right thing for the customer, the regulations will follow anyway. Some big businesses use it, we can't do that because the regulator. That's wrong, that's not true. If you're doing good things anyway, the regulator won't stop you.
That's true.
Yep.
Thank you, Reina, for asking these questions. And on to the question to Jan, also from Reina. Jan, you said you moved from the department to department in JP Morgan, from a quantitative finance degree to software engineering department. Could you share more on your journey?
Sure. So I initially started as a business analyst. So my initial role was there basically to be like a bridge between the business and the technology team, and kind of like understand the requirements from the business. The team that I've been working in is a risk team. Kind of, we automate calculation of risk of investments for different financial products. So there is quite lots of mathematical models that I, for example, was learning about at Glasgow University as part of my quantitative finance degree. And I think this was also like one of the reasons which actually got me to JP Morgan in technology, because I would be the only person who understands those risk models from all the developers, and the developers basically needed to code it into an engine or a program that can be run automatically. And then over time, I obviously picked up some of the technical skills as I was working day to day in technology. I was part of one of their upskilling programs, which basically aims to teach technology skills for those employees who don't really have technology degree. I spent 4 months at Code Clan, if someone wants to search for this. It is a digital skills academy, which I was sent to by and sponsored by JP Morgan. So I spent 4 months there learning software development, and then I came back to the same team, and I was basically just involved more on the Java development or the software development side of the project. So the journey itself was kind of quite natural. It was quite smooth. The transition itself from business analyst to software engineering is obviously quite challenging, but it could be expected. Yeah, I think like this overall theme that they are trying to really upskill anyone who doesn't have technology skills to gain those new skills. I think it also underlines this entire industry trend towards technology and making people ready for the future that is going to be digital, and it's part of this entire fourth industrial revolution movement that Stephen mentioned as well.
Thank you, Jan. I think also at big companies, and correct me if I'm wrong, FinTech is a very current topic. In my experience, when I've talked to representatives from big companies like from JP Morgan, they always say that focus on FinTech, see where it leads you. It's a great area to explore. So again, I implore you to join the society. I'll put up the social media screen again until I just say the final words. So I'd like to say a huge thank you to Stephen, Jan, and Hans for being here and presenting today. Very interesting presentations. Thank you for Reina for asking questions. And thank you for the audience for joining us today. Any final words you guys wanna say?
Yeah, I would just once again repeat that I would definitely encourage everyone to join this society. There are going to be lots of different topics covered, I'm pretty sure. So just see what you like most, what kind of most resonates with you. Focus on one specific subtopic potentially, so that when you go to apply for jobs, you've got something to actually talk about a bit deeper. And I think that's going to definitely impress the employers, and I just wish you best of luck.
Thank you, Jan. Finally, I'd like to say a huge thank you for the board, FinTech board, for putting this event together and working very hard in the background. I hope to see most of you, or as many of you as possible, at our future events. For now, goodbye.